Hello, everybody. This is the FounderMatcha Podcast, and I'm your host, Carr. And today I am with Daniel Gold. Daniel Gold is a mathematician, a former investment banker, and is now the founder and CEO of an AI startup called Stratiphy. Daniel, it's great to have you.
Thank you very much. Great to be here.
I want to dive straight in. Tell me about Stratiphy, what it is, and what makes it unique. I've done a bit of research about it. The keyword that really stood out for me was it is offering retail investors the same tools that hedge funds and banks have when it comes to algorithmic trading.
Exactly, yeah. You can do my pitch for me. No, so that it's all about kind of democratizing access to the professional tools that you find in a bank or a traditional wealth manager. And so probably the easiest way to explain it is to tell you where it came from. It's while I was working in banking, I saw how the banks were building these systematic investment strategies for their clients. All the top banks have these QAS teams, quant investment strategy teams. And these are groups of people who build systematic strategies to invest on a bespoke basis for each client. And I was very inspired by this approach, and I was trying to copy it for my own investments while I was working in banking. And it was a lot of fun building these systems to manage my investments, and it was working okay. It was just taking up a lot of my time. I had to kind of focus on my job and social life. I didn't want my whole life to be about investing. And so I thought I'll just go and find an app where I can put my strategy on it and invest into my strategy. And I couldn't find anything. And so that was the idea for starting Stratiphy. So what we're doing is giving people the ability to design any strategy they want, then backtest it on the fly. And then once they see the performance, if they want to invest into it, they just go ahead, click invest, and your investments get managed automatically according to your criteria.
That's super fascinating. Very cool. I like it very much. Tell me, what is it that makes Stratify work now? Because I guess this idea of democratizing financial tools to the average person, it's an idea that has existed for as long as fintech industry existed. What makes this possible now and not before?
So I think there's a number of aspects to it. So one is that it's a natural progression, in my view, of the way the market's evolving. So I think about 10 years ago, companies like Free Trade came about and started offering commission-free investing to investors and fractional investing. So they, and taking a step back a little bit before that, Hargreaves is probably one of the first to offer retail investors access to the stock market. So, there's companies that have come along and made sort of big changes along the way. And, like I said, 10 years ago was the free trade change, democratizing access to the market to a much wider audience at low cost. And then more recently, you had companies like Nutmeg offering retail investors access to systematically managed quant strategies. And so, my view is the next evolution of this is to personalize those strategies. No one had done it until now because it's not really the low-hanging fruit. It's a much more complex thing to build. Running bespoke portfolios for each client is more complex architecturally. It's more complex in terms of the algorithms we have to build. But that's one kind of reason it wasn't done until now. I think the other is that the infrastructure behind the scenes to enable a firm like ours to exist wasn't really there about 10, 20 years ago. So take a firm like Free Trade, they had to build everything themselves, the connections to the exchanges. There's a lot of systems now behind the scenes that simplify the architecture for us in terms of trading, account management, custody, KYC. So that enables it to happen.
So if we look at the classical players in this realm, we're talking about free trade, we're talking about eToro, we're talking about Nutmeg, we're talking about Moneybox, maybe we're Is Robinhood, does Robinhood fill in
Yeah,
that space as well, right?
I would say so, yeah.
Could you then spell it out into layman's terms? Like if I'm a retail investor and I've got 10K left over in my bank somewhere and I would like to do this, then why choose Stratify over these players that are presumably much more, they've been longer in the market, so they have a bit more brand awareness. And somebody who's not well studied might veer towards the well-known brands first.
Yeah, I mean, it's a massive market and there's different tools for different people. We're not saying we have the right tool for everyone, and no one should say that because everyone wants something different. If someone wants something that's bespoke to them, we can provide that solution. That's what's unique about us. So, for example, if you wanted to take a view on a market, say I want to invest into a specific sector or a specific type of investing and to do it automatically, then there's no one else offering that service. But beyond that, we also backtest all the strategies we offer before people invest. That's another thing that we do that no one else offers. So that backtesting is something you would get as a client in an investment bank or a wealth manager. But as a retail investor, no one's providing on-the-fly backtests for anything you're going to invest into.
For the ones who are not industry people, what is backtesting?
So a backtest is taking the guiding principles of your investment portfolio and saying what would have happened if I'd started, let's say 10 years ago and followed that approach systematically and then rebalance the portfolio on a periodic basis. So we do it monthly. So every month in that 10-year backtest, we say, what should I have bought and sold if I'd followed those principles back at that time?
Amazing. Yeah, I definitely understand it now. And that's definitely something that the other platforms don't offer now out of the box. And the strategies could be a mix between stocks, bonds, ETFs, as well as crypto.
Exactly, yes. So we do everything with stocks and ETFs. We give exposure to broad markets and bonds and different asset classes and crypto via exchange traded products. And your strategy can be a combination of all of these. Again, that's a bit of a USP. The fact that we can manage those in combination is quite unique. Most managed portfolios just look at funds.
Could you, to make this come alive for me as well as the audience, come up with a scenario where I'm a retail investor and I have a strategy in mind? Maybe you could help me flesh out what that strategy could look like and then how that would be easier implementable on Stratify.
So, I mean, momentum is a very popular and well-known type of investment strategy. So that is when you invest into the instruments that have the highest price rate change over a period of time. Let's say you're taking a 6-month momentum calculation. So you calculate the rate of change of price of all the instruments over 6 months, and you buy the ones that have gone up the most, and you sell the ones that have gone down the most. And the principle behind this is that the stocks or the funds that are rising are likely to continue rising for a period of time, and the ones that are falling are likely to continue falling for a period of time. That's obviously not going to happen all the time. You're going to win some, you're going to lose some, but the idea behind the strategy is you win more than half the time, and you end up making a profit if you apply this systematically. And so that's the principle, but we don't ask people to believe in a principle. You can then go and backtest it and look based on empirical evidence to see what would have really happened if you'd followed that. And you can see if you had invested £1,000 10 years ago, what would you achieved over that period of time? And if the evidence says this is performing well, you can choose to invest.
I think the technical term is volatility. You can almost like stratify. Just identify with me the highest volatility stocks. If I see an X% increase in rise, then sell. And if I see an X% downturn, then buy. And then just execute on that.
We can, yeah. I was talking about price movements rather than volatility, but we have a new strategy coming soon, which seeks to follow stocks based on their volatility. So we can do that as well. The idea we're introducing to the market is a toolkit that you can design any strategy you want.
And that strategy could be sector agnostic, or it could even be asset class agnostic.
Yeah, and it can be personalized to you. You can say, I want to invest into the broad market, all sectors, all asset classes, but I want to exclude automotive because I think that's, going to have a bad few years now. So you can be personalized like that.
Is that, by the way, your personal thesis?
No, it's something I plucked out of thin air.
Okay.
I'm not I'm not in a position to give any recommendations.
Retail investors can start playing with it. Is there sort of like a minimum amount of cash that somebody needs to have in order to find it worthwhile playing with it? Otherwise, it might be a bit too much work for too little
Yeah,
ROI, so to speak.
it's a great question, and that's another thing that differentiates us in the market. So, if you go to traditional wealth managers like Coots, they'll have minimum portfolio sizes where they'll talk to clients. They're looking for high net worth clients, minimum bank balances of 100K. So we're kind of going to the other end of the market. We want to make this technology accessible to everyone. We've made a minimum investment into a strategy of 100. We can't do much with less than £100. You can't really manage a portfolio. So we've tried to design it at a level that is accessible where you can experiment and get started without too much risk.
You're saying that with £100, it actually starts already getting fun to see your product in action, so to speak.
Yeah, exactly.
Are you then able to, like Robinhood, buy fractionals?
Yes.
So even the £100, could you already build a fractional portfolio of equity?
Yeah, exactly. Yeah. So it's all fractional. It will build a portfolio that's diversified, and we've embedded risk management processes all along the way. You guide the algorithm on how to build your portfolio, but we enforce best practice all along the way in terms of diversification, risk management, portfolio construction.
I'm excited. I would love to try it out myself. You already told me a little bit about your backstory. Where's the company at right now? It's live, I presume. It already has a user base. What stage your company's at?
Yeah, I mean, we're very early stage as well. I mean, we launched last year, and we've been going for about a year now. But we've had a great start. People were testing out the product initially with small amounts of money, but then they were starting to see that we were delivering what we said we would, and then they started transferring more and more. We've grown substantially in the last few months based on a lot of ISA transfers, and people are coming to us for two main reasons. One is that if you want to have a systematically managed, personalized portfolio, we are the outlet for that. The other is we have another USP, which is we offer crypto investments in an ISA. We're the only platform offering that in the UK. And so that's been hugely popular as well.
Crypto in ISA. That's amazing.
Yeah. So those are cool.
How did you do that?
So we've been partnering with a few fund issuers along the way to curate an ideal list of funds for our platform and our users. So we partnered with Wisdom Tree for commodities and thematic ETFs. We've just got a partnership with X Trackers, which is part of Deutsche Bank, for broad market ETFs, thematics, sectors, indexes. And we partnered with 21 Shares for crypto ETNs. 21 Shares are one of the biggest global issuers of crypto ETNs, but they're not very big in the UK, partly because the UK only just de-restricted crypto investment as a financial product last year. And so we're the only company with a partnership with them. The way you can invest into crypto is kind of evolved in the short period of time it's been available. Initially, you were allowed to invest into an ISA. It holds your crypto ETNs in an ISA. And then HMRC said, as of this tax year, that's not allowed anymore. They have to be held in an innovative finance ISA if you want to benefit from tax efficiency. And no one else in the market offers an innovative finance ISA for investment products. We looked into the possibility, we applied for permissions and got permissions. We're the only ones who've done it. So we now are the only place you can buy crypto ETNs in an innovative finance ISA.
Amazing. Where are we at now? What are the challenges facing you ahead, and what does the future look like?
So we're at a point now where it's kind of going well. I mean, we're getting, constant activity in terms of signups, transfers, and people using more strategies over time. So it's great to see people benefiting from the product we've been building for such a long time. So we're raising some funds now on Republic to give us more runway. And then in the longer timeline, we're looking to do a seed raise and introduce a range of products that are going to really benefit our users. So these include cash ISAs, first of all, and then treasury style model portfolios. So these will be portfolios of low risk bonds and money market style instruments. that provide an alternative to fixed rate cash accounts. And so these are going to be interesting in our strategies, because then we can offer strategies that have a low risk bond component and then other components to generate the alpha. We'll be looking to offer business accounts to expand the range of customer base that we can support, and things like SIPs.
Super exciting. I want to go back to the crowdfunding race because I'm personally really interested as well, because we are crowdfunding on Republic as well. The FounderMatcha community has now about 1,000 early stage founders that are all looking for different ways in executing on their fundraising strategy. And they would love to hear about what it is, how Republic works, and if it's for everybody, what is the best strategy to think about it, how to execute well on this thing. And I've understood that you've already achieved your target, so to speak. As we speak right now, you could close the day, but I guess people could still sneak in and get on the cap table before it closes. But it looks like you've already got what you need.
Yeah, we've met our target. We're overfunding now, so if people are quick, they can still sneak in. But we look, in terms of fundraising, it's tough. Like for any company, it's the kind of investor appetite in the UK seems to be much lower than I would say it should be. So that means founders have to hustle and try and make ends meet in alternative ways. I think the best thing to do is spend less wherever you can. Try all the routes you can. Raise from friends, family, angel investors, institutional investors if you can, but that's not always possible, especially early stages. And so crowdfunding then is a great way to do this. It's not necessarily for everyone or every company, but it can work very well. And I guess there's no sort of secret to the source of success, right? You have to have a compelling proposition. You're raising money from sophisticated investors, so they need to see that you have a compelling business, you have a plan, a strategy. It has to look good, it has to sound good, everything has to be good as you can make it. And then try raise as much as you can before the campaign even starts. The best campaigns, the best campaigns start when they're almost fully funded, and then when you launch to the public, it's not such a big stretch for them to come on board and see this is going to be successful.
Well, we chose to do it as well. It is actually quite a lot of work when you think about it, because if you go to sophisticated angels or VCs, then a pitch deck and a demo, and you might get there. But now you're going to be scrutinized with a large group of people with different levels of sophistication, asking different questions, and all your material across the board has to look great.
Yeah, that's right. I mean, that's another point. Everything's in the public domain, so people ask anything. I tend not to worry about that too much. I think, just answer things and people will understand your situation. I don't think there's too much to hide in life, really. Being honest with investors is usually the best policy. So that's not such a big issue. I've talked a lot about the process and all of that, but there are real positive, compelling reasons why this is a good strategy for certain businesses. I mean, for us, it's a no-brainer, right? We get customers, publicity, marketing, and investment all for the same price we would pay for the marketing. So it's a great way to grow our community, our audience, get in front of new people.
Yes.
I think we would do this in every round. So
it's almost like if your business has a good B2C retail kind of component to it, then it's almost like you're raising funds, but you're also doing a marketing campaign. And if you see it as such, then it's kind of worth the effort, kind of thing.
Yeah, I think so. And it can probably work for B2B businesses as well, but certainly the angle is more compelling where there's a retail angle to it.
Very cool, very cool. How big is the team now?
There's about 10 of us.
Tell me what the makeup is of your team.
As you might expect, we're quite developer heavy. So we've got 5 developers, we have a compliance lead, an investment manager, me and Nikki, my co-founder.
We're FounderMatcha. We're a founder engineer matchmaker. So quite curious to hear about the engineers. What are they? Where are they? And how do you manage them?
So we've got sort of back end and front end engineers. The back end engineers are all Django developers based in the UK, mostly London. The front end engineers are mostly outside the UK. They're all React Native developers.
Fascinating. So you decided to keep the back end locally
Yeah.
in the UK, while the front end you actually allowed them to be offshore, so to speak. Was that a conscious decision, or is that just how it happened?
It's a conscious decision. I think I'm keen to have as many people as we can, locally in our office. I think that's important for the team cohesion and sharing ideas. But you've got to be pragmatic as well. We just found some great opportunities outside the UK. People who are really talented in our network and wanted to work with them. But the reason why we wanted to keep the back end locally and the front end we're less restrictive on is mainly the IP considerations for now.
Understood. The secret sauce is contained there, of course. And are you still on a remote basis, or do you have a fixed office where everybody is congregating?
No, we have an office in central London.
Okay. It was a given 10 years ago. It's not a given anymore today, even for UK-based
No, it's
teams.
not. It's not a given, and that I've seen companies doing it successfully both ways. And this comes really down to personal style. Like,
yes,
we don't go in all the time. We go in 3 days a week.
Yes.
And I think that kind of works well for people. You get a bit of work-life balance, but also you get the social benefits and the idea sharing benefits of being together.
Yes. Sounds like you make a smart move where you say, look, I want the best talent possible, but I also take into account team cohesion and working on getting product market fit with a team that is in it together in a room. But other kind of slightly more peripheral things, then you can just get great talent at affordable price points from all over the world.
Exactly, yeah. And, we try and make it work. It's a unique situation to every company. We do what we can to make it work, but I think this setup works for us.
Are you hiring more engineers? And if you are, what are you looking for?
Yeah, I mean, we're always on the lookout for new talent. And I think people with the skill sets that I mentioned are always interesting, React Native and Django. And then quant developers are also of interest. That's something we want to have more of a focus on in the next year.
Fantastic. Look, Daniel, this is super fascinating, and I wish there was more time, but we have a hard stop. I want to say thank you for being here, and I want to congratulate you on a successful crowdfunding round. For everybody listening, Stratiphy is a new app that will allow you to get the same tools that investment bankers and banks have, using algorithmic trading across different asset classes, stocks, ETFs, bonds, and crypto. And as a unique selling point, it's able to do crypto ICAs. Then that's something that no other platform as of today is able to do. So go all out and try it out. Or if you can still, go on Republic and see if you can still fund this amazing startup. Maybe some last question that I want to ask you before we close up. I want your prediction of what the future of this retail, financial investment tools world looks like.
Well, I think the big talk is about generational wealth shift. So the old generations were using traditional wealth managers. That's all shifting towards high tech platforms. So I think you're going to see more app-based investing, more commission-free, more flexible, and more personalization. So it's all going to go towards the direction we are pushing in, I think.
Fascinating. I think that deserves almost like a second podcast session, maybe in the future.
No, be glad to do that.
Daniel, it was amazing having you, and I hope we keep in touch.
Thank you very much.